Good morning. It's great to have your company this Monday, the 28th of June. I'm Jessica Amir, a senior market analyst with Bell Direct, and I do hope this finds you safe and well. Well, up she goes again. The US major benchmarks, excluding the Nasdaq, scaled to yet more record all-time highs. The S&P 500 up 0.3%, the Dow Jones up 0.7%. US stocks over the week posted their best weekly gain since Feb, with investors seemingly more relaxed about rising inflation and rising interest rates amid quicker than expected economic growth. Nike shares were a standout on Friday. They rose 15% to a record all-time high after announcing sales this year will hit $50 billion. Of note, Nike reported China sales are improving and global shoppers are splurging on sneakers and sweatsuits. The Jordan brand in particular has been really popular following the Netflix series. All in all, though, 12 brokers upgraded Nike shares, expecting future growth, reflecting the rise of lockdown leisurewear. Now, what to watch today locally? Well, the Aussie share market might get off to a slow start this week. The futures were early suggesting a 0.1% kickoff. Two factors today could weigh on markets. Firstly, 3 days until end of financial year, so expect selling and portfolio adjustments to continue. Beyond that, the city of Sydney is dealing with lockdown city limits, so all eyes will be on stocks that could be hit amid restrictions like travel, tourism, hospitality and retail stocks. One stock to watch in particular is Endeavour Group, EDV. They demerged from Woolies, WOW. Now, EDV owns brands that you might know, like Dan Murphy's, BWS, Jimmy Brings and ALH, which owns over 300 pubs and clubs around Australia. Now, their pub business could be further hit by restrictions, given Sydney is in 2 weeks of lockdowns. However, learning from the first major Australian lockdown that we had last year, alcohol sales rose at takeaway stores. Also, keep in mind, spin-offs or demerger companies historically outperform their parent companies on the stock market for the next 12 months. So you could expect Endeavour EDV to outperform Woolies WOW. Commodity stocks could steal the show today because the oil price rallied above $74 US a barrel for almost the first time in about 3 years. The oil price has risen for 5 straight weeks and it's now at its highest level since October 2018. There's expectations the oil price could rally further. We know the Bank of America expects the oil price to get to $100 in this rally. The gold price is up by 0.2%. The iron ore fines price, which is the most traded for seaborne traffic, the iron ore fines price is up about 0.4%. And later this week, keep in mind, Thursday is a massive day. July kicks off. Traditionally, July is the third best month, I guess, for equities. People really start to put their new investment portfolio strategies into mix for the new financial year. Historically, the ASX 200 has gained 1.4% in July, so that's some food for thought. In terms of economic news, a pretty slow week until Thursday. Australia's balance of trade data is released to show how much Australia is making from exports versus how much we're spending on imports. The last data from April showed Australia made a surplus of $8 billion. And this was really important because it was supported by the iron ore price, which is Australia's biggest export. So the iron ore price rose 11% that month. So expectations for May's surplus are that May's surplus could rise to $10 billion. But I think that there should be some caution with this. Should you expect the surplus to grow from $8 to $10 billion, given that month, the $8 billion surplus month, the iron ore price rose 11%, and May's data coming up to consider that the iron ore price rose 10%. So I just am suggesting that you should take some caution, expecting iron ore stocks to see some volatility. Now, trading ideas that could be worth a look. One company is a standout. That's Aeris Resources, AIS. They're a bell potter buy, and they were slightly upgraded with a new 23.5 target. That implies 21% share price growth in a year. Now, AIS recently completed a $50 million capital raise to fast-track their exploration at their copper and gold mines, as well as supporting the life of mine extension projects. Now, AIS is leveraged to, I guess, two of Bell Potter's preferred commodities, copper and gold. And in terms of their shares from a technical perspective, they are bullish over the long term on a monthly basis. Their shares have been a monthly uptrend, and their shares also reached a golden cross. This is a trigger suggesting there could be future upside. But in the shorter term, AIS, like many specky stocks, has been trending lower. It lost about 3% last week due to profit taking. Keep in mind, though, that its shares are up 95% this year. And lastly, bullish charting signals have been seen in three stocks: Resolute Mining, RSG, Mincor Resources, MCR, and Galan Lithium, GLN. And that's according to Trading Central. Have a great day and stay safe.